Hello guys, and welcome you all to today's video. In today's video we'll be checking out how to know when it will spike in boom and crash part 2. We did the part 1 of it yesterday. If you missed that of yesterday, you can go back to the channel. That was just to introduce you to how it works, how boom and crash works, how the spikes works, and where we should check out for whenever we are trading the spikes. And once we know how to trade the spikes, then we will know when it's usually occur. Okay, so that is why I did that yesterday, and today we'll be focusing more on how we can avoid it. Okay, how we can avoid it more, especially when we are trading normally. So these are some of the things we'll be looking out for in today's video. All these will help you, will help to equip you in order for you to trade, to have a successful trading journey. Okay guys, I'll make sure you get your writing pad ready or writing materials ready. We'll be going into it just after the intro. So guys, if you are joining us for the first time, I welcome you all to Qora Digital Cash. This is a platform which I used to share with you my ideas on how you can make some money for yourself online, most especially within the forex niche. Okay, all you just need to do is just to go through my channel, watch some of my video clips, make sure you understand whatever strategies you're trying to put to practice with. Then make sure you practice and perfect your skill first on your demo account before you try it out on your real account. I will repeat that again. Make sure you practice and perfect your skills on your demo accounts before you try them out on your real account. That is our tradition here. Okay, so if you want to be successful just like the rest of us, you need to follow the simple rule, which is practicing first before trying it out on your real account. Okay, so quickly, if you love my videos, kindly give me a thumbs up and share with families and friends. And also, if you have any question about any of my videos, or probably you want to know more about the trading strategies that I'm using, you want to know more about any of my trading tools, feel free to contact me. My contact details are displayed on the screen, and I'll be dropping them in the description box below this video. And also quickly, if you are yet to subscribe to this channel, then you are missing a lot. But because I usually dish out training videos like this, and I also dish out some other vital information that could be of help to you whenever you are trading. Okay, one of the information that you can that can be of good help to you is that of the $500 trading tips for boom and crash that usually come up later on in the day. Okay, so things like this, when you are not a subscriber, you won't be able to get the notification whenever we are going live, so that you can join us live and direct. Okay, so that is that. So all you just need to do to be a subscriber is to check below this video for the subscription button, click on it, and also set the notification bell beside it to all notification. Okay, that way you will always be notified whenever I am uploading a trading video like this. Okay, so quickly we'll be going straight into what we have for today. But before we do that, I want to say a big thank you to you guys who have been joining me on the $500 trading tips for boom and crash. Okay, I'm really happy that you guys are really taking advantage of this, and you guys are really milking the markets with this. And I thank you for all the screenshots you sent to me this morning. Okay, I got so many of them this morning. I'm really happy that you guys are really milking the market with the analysis we usually carry out during the video. Okay, so more of it will come, and expect that of today later on in the day. So stay alert and make sure you follow through whenever we are doing that. Okay, so quickly let's go straight into what we have for today, which is um how to know when it will spike, in boom and crash. Okay, the spiking aspect of boom and crash is the sudden reaction that happens in the market, in the boom and crash market, that usually put people in negative in most cases whenever they are trading normally. Okay, but for those that knows their way around it, they know how to avoid all these things. Okay, this is how it happens. Okay, let me go to the jump board so that you will get to see it properly. Okay, let's say for crash, the market is going up like this. Okay, let's say it is going up like this, and suddenly you just see it going down this way. Okay, without any without any notification of it trying to do that. Okay, so that is it. Not that there won't be any notification or a signal that it is likely for it to do that. Okay, but just that we don't know how to identify all these things. So in today's video I will be sharing with you how to do this. Okay, the first thing you need to do, that is why yesterday's video is very important. Okay, I will advise you to watch yesterday's video so that you know how it works first before you watch today's video. Okay, so there are some things we will be looking at. Okay, number one is we will be considering the trend. Then also we will be considering the S and R. Okay, S and R. Okay, so all these two areas are very important. Then we will be considering one more thing, the breakouts. Okay, the breakouts. Okay, so these three things are very important whenever we are trying to avoid the spikes. Okay, in case you don't know, for boom and crash, the spikes usually happen around here in most cases, around the S and R, which is the support and resistance level. Okay, the resistance, then the support level, it usually happens around there in most cases. And if it is a major support and resistance level or a very fouled one, you are most likely to have it for a very long period of time or a very long one. Okay, that is when it usually happens, because it is either the market is having a pullback at that point, and the pullback can go for minutes, or the market is having is reversing totally, that is changing from one trend to another. So that usually happen at a major support and resistance level. Just like, you know, the resistance level is always at the top while the support level is always below. Okay, so all these are very important so that you will understand how it works. That is why when you are trading boom, and the market is actually going down this way, is going down, once it is approaching the support level, do not let it get to the support level totally. Once it is approaching the support level, then you should exit the market immediately. If you refuse to exit the market immediately, you are likely to have the sudden action in price action. Okay, in the price, the sudden action in the price, which is always the opposite, I mean the negative aspect of the normal trend. Okay, so that is it. So this is when it spikes up. Okay, so if you had come out right from here, you won't be involved in the spike. You can see that you won't be involved in the spike, so that is always very important. The same thing is applicable to crash. Okay, let's say you are trading crash normally and the market is going up and up. Once it is approaching the resistance level, then you should exit the market immediately. Do not let it get to the resistance level before you exit the market, because the action usually happen suddenly. Okay, it is not something that happens that notify you before it happens, or it is not something that gives some signals or that tells you that it is going to happen before it happens. It happens suddenly. You can only know where it is most likely it happens, okay, which is what I'm trying to explain at the moment. Because once it gets to this resistance level, almost getting it, or a little bit um be above it, a little bit above it, it can spike down, it can crash down immediately, okay. So that is why when we are talking about support and resistance, okay, we don't say support and resistance, we say support and resistance levels or region, okay, because it is not just a single place. It can be as big as this region, that is within this region to this region could be the resistance level, okay. So that is why you can see the bar is not just a single line, it is a little bit wider in width, okay. So all that are very, very important. You can see these two, and you can go back. So we usually have the levels like that. You can see this one, so you can see this supports, okay. So which means within this region to this region, that is where the support is, okay. So let's go back to the chart board. So all these are very, very important. So your support and resistance levels are very, very important whenever you are trying to avoid the spikes, okay, whenever you are trying to avoid the spikes. So that is very, very important. For boom, you focus more on the support level, because once it is getting to the support level, especially a major one, then you are likely to have a spike. And for crash, once it is getting to the resistance level, most especially a major one, you are likely to have a spike, which is the crash down that happens in crash, okay. Those are very, very important. Then let me use that opportunity to discuss about the breakout, okay. The breakout is also important. This time around, you can see that when we are talking about support and resistance level, we're referring to the boom being a major support, focusing more on support, while crash focusing more on resistance, okay. But when we are talking on breakout, okay, boom we focus more on resistance, while crash we focus more on support, okay. Will that happen? This is how it happens, okay. I'm just trying to let you see all this before we go straight into the chart. It's not all about the chart, it is about you knowing what the chart is throwing at you, okay. You being able to interpret it. If you are unable to interpret it, then you won't be able to trade successfully. And the best way I can explain this is by showing you the actions right here using this method, okay. So that is it. So quickly I'm going to show you. Let me start with boom. For boom, let's say the markets the market was going up. Let's say the market was going up, it has been spiking up and spiking up, okay. And you expect it to reverse here, it reversed a bit, then went back, try to test this place again, okay. So once it breaks out from this resistance level, you are likely to have more spikes happening, okay. You are likely to have more spikes happening, so you should take note of that. That is also very important, because it is breaking out from this resistance level, thereby turning this resistance level into a support. The same thing is applicable to crash, okay. Let's say the market was coming down before and it got to this place. Normally we usually want it to pull back, okay, or to reverse back. That is what we are always expecting, which is the normal thing that should happen. That is why some of the custom made indicator, they will have told you that you should buy here, and you will have quickly jumped into the market, and when it breaks out this then some of them will show you some of the what was it called, the support and resistance level indicator will show you that this is a support level. And once it breaks out, you see the support level disappearing, and you also see the buy order also disappearing. Not that the indicator is wrong, okay. the indicator was right based on the strategies used to code it. Okay, normally if I'm to do my technical analysis, or if you are doing your technical analysis, you will have taken it that the markets will reverse here, or there will be a pullback, so you can place your buy order here. And if it did not happen the way you have predicted, and it breaks out from there, does that mean that you don't know how to do your analysis? Does that mean that you don't know what you are doing? Does that mean that your analysis is wrong? No, it is not wrong. It is not wrong, because out of 100%, we have 80% assurance that, more than 80% assurance that there will always be a pullback once it is approaching that level. Okay, if not a total reversal in price action, at least there should be a pullback. Okay, so not that you are wrong, you are not wrong at all, but the same thing is also applicable to the indicator. You don't blame the indicator for that. It is the market that forces the breakout to happen, not the indicator. Not that the indicator is wrong, or not that the indicator is not perfect, not that the indicator is repenting, or whatever terms you guys are using. Okay, but the issue is, at that stage you should understand that there is a breakout at that particular point. Okay, once there is a breakout, there is nothing the indicator can do than to let you know that, okay, a breakout has happened right there. So definitely that support level is no longer a support level, it has turned into a resistance level. Okay, or that buy order that you are supposed to take there is not to hold again at that particular point. You need to wait for another time to place your buy order. Okay, it is very simple. If you say the indicator is repenting or lagging around there, does that mean if you are doing your own personal technical analysis manually without the indicator, does that mean your knowledge is lagging? Does that mean your knowledge is repenting? Does that mean your brain is lagging at that point also? No, it doesn't mean that. It does not mean that you don't know what you are doing. It does not mean that your knowledge has failed you. It does not mean that your skills has failed you. Just that that is what the market is throwing at you. You don't have the full control of the market, no matter how good you are. You don't have the full control. A single news can scatter the whole market. If you want to know this, try the fiat currency platform. Okay, try out trading fiat currency. A single news can totally destabilize your knowledge in trading. Okay, so that is it. That is it. It is as simple as that. But there is always one thing after that breakout, that action. If you are having a very good indicator, okay, that action that it has given you information on, probably the buy order that it has given you, or maybe the trend has already shown you that it is going back on uptrend, that action that it has given you information on will still come up, but it might not be immediately. But watch out for it, it will definitely come up. That is if you are having a very good custom made indicator. Like I said, even the very good custom made indicator still shows that it is not 100% perfect, because it is not in total control of the market. So this is very, very important. Once you know all this, then you will be able to put all these trading tools into use. Okay, it will also help to broaden your knowledge on how to trade it successfully. I'm very sorry this can be a little bit longer than expected, but I'm trying to dish out the full knowledge on how you can trade successfully. This is a full training, guys. So many people paid for this, but I'm dishing out for free. I know I'm going to get a lot of messages from other YouTubers asking me why I'm trying to show you guys this. Okay, but what I am after is that you should make money. You should know how to trade. Okay, then the last one, which is also very, very important, is that of the trend. Okay, I decided to, you can see that I wrote it. It was the first, it is the first one I wrote. The first factor, or okay, let me use factor. Okay, the first factor that I put on the Jamboard. Okay, but it is the last one that I am explaining it right now. I'm not explaining it it's not the first thing I explained, okay. That it's not the first thing I explained, okay. I decided to keep it to the last, to save it for the last explanation, because I want you to understand that aspect very well, because it is very very important. It is even more important than any one of them, because without this you won't be able to determine your S and L, you won't be able to determine your breakouts also successfully, okay. So the trend is very very important. Once you know the trend, then you will understand the way, once you understand the way each of the assets works, and you know the trend which they work very well, then you will be able to avoid the market whenever it is spiking, okay. For boom, okay, spikes happens more when the market is on uptrend. When the market is on uptrend, for boom, okay. For crash, spikes happen more when the market is on downtrend. That is very very important. For boom, spikes happen more when the market is on uptrend. For crash, spikes happen more when the market is on downtrend. So what am I trying to say? Okay, let's say the market, the trend, you have a very good indicator showing you the trend, and the trend already shows that the market is on downtrend. For crash, and you don't know how to trade the spikes, what do? You stay away from the market, or you scalp trade, okay. If you have a very good indicator that is showing you your entry point for a buy and a sell, okay, so definitely once you get a buy, you quickly go into the market and exit the market before it gets to the support level where it may likely spikes. At that stage, when the market is on downtrend, every support level is very very important, no matter how minor it is, how small the support level is, no matter how small the support level is, they are very very, sorry, I'm talking about crash. Every resistance level is important in crash, okay. Every resistance level is important in crash, no matter how small the resistance level is, okay. It can trigger a spiky action, okay. But for boom, every support level is important, no matter how small the support level is. You must take note of them, okay. Whenever the market is in uptrend, for boom, every support level is important. Whenever the market is in downtrend, for crash, every resistance level is important. So you need to take note of all this, because sometimes you don't know why it keeps on spiking and spiking and spiking. It is because you are trading on the wrong trend, okay. If you are trading in the wrong trend, then definitely it will be spiking and spiking, and you won't be able to make any profit, okay, any profit. If you are trading in the wrong trend, you won't be able to make a reasonable amount of profit. At the end of the day, you might even be losing the whole of your capital if you continue that way. So you watch out for the trend before you jump into the trade. So I'm going to explain that again. For boom, spikes happen in most cases whenever the market is in uptrend, okay. That is for boom. Spikes happen in most cases whenever the market is in uptrend. But for crash, it happens whenever the market is on downtrend, okay. Whenever the market is on downtrend, it happens almost all the time like that, and we can go to the charts to check this out, okay. So let's go straight to the charts right away, okay. This is 5 minute time frame, and I'm going to, this is boom 1000. Let me see if, okay, good. Check out here. This is uptrend, and you can see the spikes. You can even, we add an invisible spike right here. You can see that there is no breathing space for it to come down at all, okay. It keeps on happening and happening, and right here it pulled back a bit. That was when it was pulling back, but check out here, it keeps on spiking and spiking again, okay. That is that. So let's check out other assets. Let's check crash, okay. For crash, check it out. This is downtrend. You can see the downtrend here. You can see the way it's was crashing down, okay. You can see the way it was crashing down right here, okay. Let's check out boom 500. 500 is more volatile than 1000, okay. You can see the spikes that are happening right here. You can see them. You can see this. Check out this side. You can see the way they were just happening. Okay, so that is always very important whenever you are trading. Okay, let's check out crash 500. For crash 500, okay, you can see the crash down right here starting from here. Okay, check it out, starting from here. That is the downtrend area. Okay, to this side. Check out from here. Check it out. Check out the way it keeps on it's check out the way it was crashing and crashing down till it got to this support level. So all these are very, very important. So if you don't know all these, and you decide to buy crash around here, you are not selling, you decide to buy, you just be surprised that your trading capital is wiped off before your very eye. Okay, because you are trading against the trend. And you are expecting profit from there. Okay, so when you trade against the trend, then you don't expect profit because you are taking huge risk at that point. Okay, the risk you are taking is too much, so it is most likely you lose your profit at that point. Okay, so you can check out other assets. Let's check out boom 500 again. You can see right here you are also trading against the trend. Check out the way it keeps on as in the market was just spiking up and up and up till it got to this level. It's because you are trading against the trend. So if you should come in and sell boom anywhere around here, then you are most likely to lose your money. Okay, you are most likely to lose your money. So that is it. It takes the grace of God for you not to lose your money if you don't know what you are doing. So that is just it, guys. So this is it. I believe you have learned a lot from today's video. All I want you to do is to watch this over and over just for you to understand the way it works. Okay, understand everything I have highlighted in this video. Go back to your chart, try to identify all these areas so that you will know how to trade these two assets or the four assets successfully without getting yourself involved in spikes. Okay, and another good thing about it is if you are very sure of the trend, for instance, okay, let me quickly add this to it so that you will understand more about this, or probably I will come up with a part 3 tomorrow so that I will use that to explain that properly, because this video is getting longer already. Okay, if you are trading in line with the support, okay, let's say you decide to sell boom from here, even if you are involved in a spike and the trend is still giving you a positive result, then definitely you will end up in profit. So guys, I'll be stopping right here. Remember, this is coming to you courtesy Qora Digital Cash. Feel free to contact me if you have any question, or you want to share any of your results with me, or you want us to do some analysis together. You can contact me. We take a look at some of the things, but that is after you have practiced. You must have practiced with some of these things. Okay, so you can contact me so that we can have a chat together. Then also, if you are yet to subscribe to this channel, kindly do so now. Watch out for my next video. Until then, God bless.